We're here today with Joel Versh, a trusted family go-to guy and insurance authority in the local area. Hi, Joel. How are
Hey, Judy,
you?
how are you doing?
Pretty good. Look at this beautiful background in Lake Rancho, Santa Margarita.
I love it out here.
It's gorgeous today. So let's get started with our interview about auto insurance. Joel, your agency motto is you worked hard to gather your assets. We work hard to protect them. How does that philosophy change a conversation when someone goes to you about auto insurance versus just shopping for the cheapest rate?
That's a great question. Everybody wants to save a dime, myself included. But is it really worth saving $10 a month to cost you $50,000 if you're ever in an accident? So what I try to do is I try to make sure that you're well protected for what you've earned. In other words, you worked really hard to gain your assets, your car, your house, your family, everything like that. My job is to work really hard to protect them. And this is California, so everybody wants to sue everybody. So my job is to make sure that if there's ever an incident, you're well protected.
That's awesome. You came from 15 plus years in the lending industry before moving into insurance. How does understanding home financing and asset building change the way you look at auto insurance? And why does that background make you a fundamentally different kind of advisor?
Well, first of all, I like everybody to be well protected no matter what your assets are. But knowing my background in lending and finance and things like that is I have questions that need to be answered with regards to your specific needs and what you specifically have, because you need to make sure that you're protected for your assets. Meaning a renter with just getting started, just getting through college or even still in college, much, much different than somebody that's a professional with a home and a family and a couple of cars and a business to protect. So you really need to know more than just the car that you have to make sure that the policy is right for you and your family.
Most people treat car insurance like a utility bill. Pay it, forget it, hope you never need it. Why is that mindset one of the most financially dangerous things a driver can do?
Well, this is a great question. It comes up a lot. Nobody wakes up in the morning and says, today's the day I'm going to get in an accident. They call it an accident for a reason. So what you need to do is you need to be prepared for that situation. So you can't just forget about your bill, you forget about your policy. You need to revisit it every once in a while. What has changed that you need to tell your insurance agent? I mean, other than the typical, hey, I got a new car, right? But hey, maybe you bought a house and or your house now has a couple $100,000 worth of equity that you may need to be protected just a little bit differently now than you did before. So you just need to communicate with your agent. And that's why I like to reach out to my clients at least annually to make sure that they're well protected.
Awesome. If someone has significant assets, a paid off home, investment accounts, retirement savings, and they're still carrying state minimum auto coverage, what are they actually risking? Walk us through the worst case scenario in real dollars.
Worst case scenario is you can lose all of that.
Oh, really? Oh,
Quite,
my goodness.
quite simple. Insurance, like a government or tax lien, can go after you forever. You can have your wages garnished forever to pay off an insurance bill. So what you need to look at is the state minimum, if you guys didn't know, is what's called 30, 60, 15. And what that does is that just covers you for the state minimum. The last number is what's most important, or one of the most important things, and that's your property damage. If you can, just do a quick Google search. How many cars can you replace for $15,000 right now? You can't buy any. The average cost is about $50,000. If you're in an accident, you total a car, and you only have $15,000 worth of coverage, guess who's paying the other $35,000 to replace the car? You. And that's just property damage. That's not doing anything with liability.
How does an umbrella policy connect to auto insurance? And at what point in someone's financial life does it become non-negotiable, not optional?
An umbrella policy, which we'll talk about in the future, is basically an extra layer of liability that sits on top of your current policies, both your auto and your home. So in other words, if you have $300,000 worth of liability coverage on your auto, you have an umbrella. Now you're protected for 1.3 million. The greatest part that you just mentioned was, when does it become almost non-negotiable? My take on that, this is California, You own a home, you should have an umbrella. It's very inexpensive and it gives you $1 million worth of coverage. You should have one.
Definitely. Joel, let's say my car is 8 years old. I have
Okay.
had zero accidents and my premium just went up. What is actually going on here? Why does loyalty and a clean record not seem to matter anymore when it comes to what I'm paying for in auto insurance?
That is a question I hear almost every day.
I'm
My car's
sure.
getting older, but my premiums are going up. Here's why that happens. The cost to repair a car is going up. That's the first thing. The second thing is look around. Remember, your auto insurance is not only covering your car, it's covering what you hit. Therefore, your 8-year-old car hits my brand new Mercedes. The insurance has to pay to repair that or replace it. That's why the premium, one of the big reasons why premiums are going up. The second reason is a typical repair, what used to cost $1,000 5 or 10 years ago. Let's say you get into a little fender bender, right? You replace the bumper, paint it, you're on your way. That was $1,000.
Oh,
Now that
wow.
$1,000 repair, you just hit my bumper that has 4 sensors in it, 3 coats of paint, a special that doesn't fade. That $1,000 claim just became a $5,000 repair. That's why the premiums are going up for the most part. So it does have a little bit to do with what you're driving, but mostly what's driving around you.
Yeah, I never thought about it in that way. Thank you. Everyone I talk to is saying the same thing. Auto insurance rates feel completely out of control right now. Walk us through what's actually driving up costs up across the board, because from the outside, it looks like the insurance companies are just printing money. Why do you think premiums are going up? I know you elaborated in the last, but if you could talk more about it.
Yeah, I mean, the biggest reason premiums are going up are hidden expenses to the insurance company. Those extra costs and repairs. That's obviously number one. Number two, things like traumatic brain injury, which didn't
Mm,
really exist. We didn't know about it 10 or 15 years ago, is a very real thing. That extended care to take care of somebody that was hurt pretty bad in an accident is now in the hundreds of thousands of dollars.
oh, wow.
That's why you have insurance. And nobody really thinks about that, but there are things like that that are really driving costs up. And it's not like the insurance company is printing money. The insurance company has larger payouts, so they have to collect more money in premium.
That makes total sense. Walk us through what's actually inside a standard auto policy: liability, collision, comprehensive, uninsured motorist. Most people have no idea what they've actually purchased. What are the sections that most matter and why?
Well, okay, so the easiest way to give you a kind of a quick explanation of this are the numbers, right? You hear 50, 30, 15, 100, 300, 100. What those numbers actually mean are if you're in an accident and it's your fault, that first number covers the amount of liability protection you have per person. So in other words, you're driving, you hit me. If I'm injured less than $100,000, cool, your insurance company writes the check. Judy doesn't have to pay for anything. That's the first number. The second number is liability per accident. So in other words, if Judy hits me
Mm,
and I'm driving in the car with myself, my wife, and my son, and we're all injured less than 100,000 each, cool, insurance covers it. Anything above that, you're paying for.
oh, wow.
That's why those numbers are important. That last number is property damage. So that's the cost of property that you damage.
Mm.
Everybody thinks of, oh my gosh, I hit you. I'm sorry, I'll fix it. Great. What happens if you hit my Mercedes and push my Mercedes into a Porsche? That
Mm.
drives up costs pretty quick.
Oh, my
So
goodness. I didn't think of it in that
yeah,
way.
those are the big three things. You mentioned or uninsured motorists. There's actually uninsured or underinsured motorists. And what that covers is when somebody, either you hit somebody or more importantly, somebody hits you
Right.
that either has the state minimums or no insurance. That's when that particular part of your policy comes in and your insurance company fixes it, fixes your car, your medical bills, things like that. So that's why uninsured motorist actually protects you and your loved ones in your car in case of an accident that somebody hits you that's not covered.
That is so good to know. Thank
Yeah.
you, Joel. California has some of the highest rates of uninsured and underinsured drivers, like what you said, in the country. What does that mean for someone who gets hit by one, and why is the coverage that protects against that scenario one of the most overlooked? in the market.
Like we just talked about.
Right.
That's what's called uninsured or coverage, uninsured or underinsured motorist. And that's really one of the few parts of your insurance policy that protects you in case somebody hits you. Everything else is kind of you if you hit somebody else. So that's why that's very important to have at least the same amount of liability coverage on the what we call as you do as on the liability. That makes you well protected.
Someone's teenager just got their license, Joel. What does that single event do to a family's risk profile and coverage needs? And what are the mistakes parents make in that moment that they don't discover until there's a claim?
Right. So this is pretty common, especially with the fact that if you have a teenager, many insurance companies actually now are requiring you to list all the people in the household and their birth dates, so that when the driver does hit that 16 age here in California, they know to question, do they have a license yet? If not, are they getting one? Where are they? Now, everybody kind of freaks out when their teenager gets a license. It's natural. Why are the rates so expensive when that happens? They have the least amount of experience. We know that driving has a lot to do with experience. We know what to look for. We mean drivers that have driven for more. We can assess the situation better than a younger, inexperienced driver. There's just more accidents when you're young, and they cause the premium to go up. Highly recommend making sure that you communicate with your insurance agent prior to getting a permit. Once they start driving, you got to get them added on the policy, because if they're not added, there's an accident that they're driving, there could be an issue with claims coverage at all.
Yeah,
so we don't want that.
Completely. Rideshare drivers, Uber, Lyft, DoorDash, often don't realize their personal auto policy has a coverage gap the moment they turn the app on. Can you explain exactly when personal coverage ends and where the exposure lives?
In today's day and age, where more people are driving Uber, Lyft, that sort of stuff, this is very, very, very important. We call it the rideshare endorsement. So the way it works is this: when you're driving your normal vehicle, you're just driving to the store, you're going to the soccer game, whatever, your insurance covers you. Perfect. If you happen to be driving so let's say you're driving for Uber, and if you have a passenger in the car, Uber's policy covers you, your personal policy doesn't. Here's the issue. As soon as you put the app on to say you're available to drive for Uber and you don't have somebody in the car, you no longer have any insurance.
Oh, wow.
That's what that endorsement covers. The endorsement covers that short amount of time between turning the app on and getting somebody in the car, because once you turn the app on, now you're becoming a for-hire person, and you're driving commercially, not personally. But Uber's policy doesn't pick up until you put somebody in the car. That's why it's super important to get that rideshare endorsement put on the policy, because anything could happen in that split second.
Yeah, that's great information to know. Thank you. What's the most expensive misconception you hear from drivers who think they're fully covered? And what's a conversation like when you have to show them the gap?
Fully covered means different things to different people. So we don't tend to use the word fully covered. I know most people do, but we don't, because your idea of fully covered and my idea of fully covered, two totally different things. If you rent, you're just in college and you're just starting out driving, your idea of fully covered might be state minimums. I'm legal to drive. However, being a homeowner, a professional, I have assets, I have a family, my idea of full coverage is another thing. In other words, liability, property damage, uninsured motorists, things like, for example, am I covered if my car gets into an accident and I can rent a car? That's an endorsement. Do I have windshield coverage? There's a bunch of different endorsements that you can add to the policy to create a more robust policy. And it just means different things to different people.
Let's say I lend a car to a friend, Joel, and the friend gets into an at-fault accident. Who pays and what happens to the owner's policy, the rates, and their financial exposure?
Okay, so that's what's called permissive use. And what that means is, quite simply, I'm allowing you to drive my vehicle. Now, your auto insurance follows the car. So if I lend you my vehicle, my insurance covers it. So at least with farmers, we allow permissive use. Not everybody does. Definitely something that you should check into if you're routinely lending your car to a family member or a friend. If I'm driving somebody else's car, their policy becomes first in line. So if I borrow your car and you have state minimums and I get into an accident, your policy pays first, then my policy will kick in to cover any differences. Regarding an accident, if the policy pays out, the policy is going to be charged, premium. So
Mm,
it does affect you if you get into an accident driving my car, even though it wasn't me. It will affect your premium.
it will go up.
Chances are, yeah.
Yeah. Good to know. Thank you.
Gonna stop lending that car out now, aren't you?
Yeah. I'm going to rethink that one. A client drives a lease vehicle, another owns outright, a third has a loan. How does the coverage conversation change for each one? And where do people get it wrong most often?
It really doesn't matter who owns the vehicle, other than the requirements by that lender. So in other words, sometimes lenders will say you can't have a deductible over $500 or something like that. They all require you just to have the state minimum. There are some lease companies that require you to go to 100, 300, 100 coverage, but it really just depends on the individual lease. I'm not as concerned about who owns the vehicle as the driver needs to be protected accordingly. There's not a lot of changes to the policy other than possibly the deductible, maybe some limits, but mostly it's.
Got it. Electric vehicles, Teslas, Rivians, high-end EVs are everywhere in Orange County now. How does insuring an EV differ from a traditional vehicle, and what are the coverage considerations most EV owners have never been told?
Again, it goes back to the car is not the car, or the financing company is not changing anything, and there's nothing really different other than a lot of the electric vehicles are very heavy, meaning when they get into an accident, they cause substantially more damage than a 2003 Toyota Tacoma that's very light compared to a Tesla or a Rivian or a Cybertruck that weighs 3 tons. So they could cause more damages. So that what happens there is you just need to make sure that you have the correct protections in place. So other than that, it's nothing much more than that.
That's awesome. That was such great information about auto insurance, Joel. Thank you so much for your time. And how can people reach you?
Well, my name's Joel Versh. I'm with Farmers Insurance. You can reach me at 888-334-7188 or joelvershinsurance.com. Happy to help.
Thank you so much.